So over the last few years, I have become more and more interested in the personal finance space. Really anything to do with money, I will engage with. This can be, podcasts, this could be books that I've read, it could be YouTube videos that I've watched. But there has been one book particularly that has had a disproportionate impact on the way that I view money at the moment, the way that I deal with my personal finance. And that book is The Psychology of Money by Morgan Housel. This book is absolutely phenomenal. I read it very, very quickly when I picked it up. I couldn't put it down. I've revisited it several times. And today, I want to talk to you about 5 key takeaways from this book that I think are invaluable, how you can apply them in your own life, not only to a financial perspective, but also just a general life perspective, principles that you can apply to improve yourself overall. So without further ado, let's jump right in to the 5 tips. The first lesson that this book has taught me is that no one is crazy. The thing is that people do crazy things with money, but no one is actually crazy because everyone has their own experience of the world, everyone has their own relationship with money, and all of the things that have happened in that person's life leading up to that financial decision have made them the kind of person where that decision that they made is the only logical one to make. You see, from our perspective, from your own perspective, we all think that we know how the world works. But the issue is that we actually only know how our very, very tiny sliver of the world works. Your personal experience with money maybe makes up 0.0000001% of all things that have ever happened, but it shapes about 80% of how you actually view the world. Maybe you have a friend who is really cheap with their money. They don't like to eat out. Maybe you have a friend who hides purchases from you and your friend group or their family. Maybe you have a friend who spends too much money on clothing or is always needing the new thing. Whatever it is, if it doesn't make sense to you, that's fine. But what you have to realize is that it makes sense to them. It is completely justified in their mind based on how they have been brought up. And the thing you have to realize is that you aren't perfect either. Everything, like I said, is going to make sense in your head, but I'm sure other people are looking at the things that you do with money and asking the same question of,
why would he do that? Why would they do that? That makes no sense.
And I think that the most important lesson I learned from this principle is just to be less judgmental when it comes to other people's decisions. Yes, it might not make sense to you, but it makes sense to them. And so you need to understand from their perspective, it was the right thing to do. It might not make sense to you, but let it be. The second key principle from the book is that it's really easy to never have enough. So in this book, Morgan says that one of the hardest financial skills is to get the goalpost to stop moving. And what he means here is that people often set these goals for themselves, right? I want to have X amount of money in the bank. I want to make this much per year. The issue is that when you set goals like this, you're setting yourself up for failure because when you hit that goal, inevitably, if it's realistic, you're just going to want more. It's not good to have the idea of wanting to hit a certain number because what's going to end up happening is when you hit it, the goalpost is just going to continue to move and you're going to be chasing that for the rest of your life. What ends up happening is that it turns into this sort of social comparison issue in which you are never going to win. He gives a great example in the book about a rookie baseball player. Let's say that he makes $500,000 a year to play baseball for a living. Not only does he have his dream job, but he makes a lot of money. Amongst most of the population, he would be considered incredibly wealthy. However, when you compare him to, let's say, Mike Trout, who is one of the greatest baseball players of all time,
Mike Trout crushes one,
who makes $30 or $40 million per year, that rookie player all of a sudden starts to feel inferior and actually starts to feel like he is in fact broke, when in fact he is already in the top 0.1% of people on Earth. And the cycle keeps going. So Mike Trout is going to be looking at hedge fund managers who make hundreds of millions of dollars per year. And those hedge fund managers are going to be looking at the top 1% of hedge fund managers who make hundreds more millions of dollars per year. And those people are going to be looking at Warren Buffett, who's increased his net worth of billions of dollars over the last few years. So The social comparison never stops. It's a very bad way to look at the world, and it's a way to ensure that you are never going to be happy with what you have. And once again, this is a really important concept outside of finance. Really anything in your life, whether that's a relationship, maybe that is your physical appearance, maybe that is the physical things that you have. It is never going to be the best. But the point is not to be the best, because there's always going to be someone out there who has something better or nicer than you. The point is to accept what you have, set your own goals for what you want to achieve, what is going to make you happy, and not compare yourself to everyone else who is doing better than you. The third key lesson from this book is that tails drive everything. So if you don't know what I mean by tails drive everything, this is essentially where a very small number of events actually contribute to a large percentage of the outcome. So take venture capital, for example. If a venture capitalist were to invest in 50 companies, half of them are going to fail, 10 of them are going to do okay, and a few of them, maybe 1 or 2 or 3 of them, are going to do significantly well, and they're going to drive nearly 100% of that firm's returns for the entire year. The idea here is that even a venture capitalist who is making a tremendous amount of money, who is driving these insane returns, is actually making a ton of mistakes. They are missing a lot, right? They're only actually banking on 1 or 2 of those companies to do extremely well, and the rest of them are kind of just whatever. The thing that really clicked with me is that it's okay to fail. And when you look at people who are successful, it's really easy to assume that they never did, but in fact, they probably failed much more than you or me have ever even tried in the first place. Give yourself permission to fail. The more that you go up and the more tries that you take, the more likely you are to actually strike gold and reach or hit those long tail ends of those distributions. So my suggestion to you would be to start that YouTube channel, to write that novel, to start that business, whatever it is. Yes, there's a high likelihood it might fail, but there's also a chance that it could go incredibly well. The fourth key lesson is to be reasonable instead of being rational. So what does Morgan mean by this? Well, the truth is you aren't a spreadsheet. If you were, every decision that you made would be 100% rational, would be backed by numbers or data or something like that. But the truth is you and me are not spreadsheets, I hope. We are reasonable people. We have emotions, we have feelings, we have things that make us feel safe. And what he's saying is it's okay to lean into those, do things that make you feel better, that you are more comfortable with, over just doing something that is 100% rational just because it's the right way to do something. I remember I heard a great story one time on Tim Ferriss's podcast. It was actually when he had Morgan Housel on the podcast. And he was essentially saying that Tim was talking to a friend of his about his mortgage, and his friend was very financially successful, looked at Tim's balance sheet and saw that there was still, a mortgage on there. And he was asking Tim, why haven't you paid that off yet? And Tim kind of gave the textbook, spreadsheet answer. He was saying, oh, well, it was low interest rates. It's basically free money, yada, 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 yada. And Tim's friend understood all of that finance side of things, but he said, just pay it off, because the effect that it has on you psychologically of knowing that you just have a house that can't be taken away from you is much more comforting than knowing that you might be able to make a few bucks or take advantage of the financial situation. So in that case, that's an example where you should be more reasonable than you should actually be rational. If something makes you comfortable, lean towards that. And yes, once again, you can apply this to other areas of your life. Maybe you're making a decision about your life partner. Maybe you're making a decision about what school you want to go to or what job you're trying to take. You don't have to make the decision that is 100% rational. You have to live with that decision. You have to live with the consequences of that decision. And so it's really important for you to feel comfortable making that decision, making sure that it's a reasonable choice for you, and moving forward with it if it is. And the fifth key lesson in this book is to just figure out what game you're playing. There are a ton of games that people play in everyday life. Maybe that's the game of power or prestige or status, whatever it is. It's really important for you to figure out what game that it is that you're playing and to follow your rules and not look at what everyone else is doing. It's really easy for us to see what people spend their money on, their cars, their homes, their clothes, whatever it is. However, it is not as easy for us to see what their goals are, what their worries are, what are their aspirations, and these are the things that actually matter. These are the things that drive those financial decisions. And those are the games that I'm talking about. figure out what game it is that you're playing to make sure that you align with the financial decisions that you're gonna make or the decisions you're gonna make in your life in general. You know, Morgan has a really good example in the book where he's talking about a young, prestigious lawyer on the way up in his career and how he spends thousands of dollars on clothes to keep up his appearance because that is what is demanded of him as a young lawyer in a busy city at a big firm, right? However, Morgan, on the other hand, is a writer, right? He doesn't need all the fancy clothing, all of the stuff that's going to help him get that prestige, get that status in the workplace, because he can work from home on his laptop, in his sweatpants, in whatever he wants to wear. And so he doesn't need to have the same things that that other person does, that lawyer does, right? They're playing two completely different games. And so what he's trying to tell you, and what I'm telling you right now, is to figure out what game it is that you're playing. Are you playing the prestige game? Are you playing the power game? Maybe the status game? Or are you not playing any of the games at all? Doesn't really matter. Figure that out and start making decisions for yourself based on those principles, not on what other people are doing. And so those are my 5 favorite lessons that I learned from this book. There are like a ton more in this. So there's like 20 chapters, I think. I really only covered a few of them here. I could not recommend this book more strongly. Please pick it up if you have not read it. It will genuinely change your financial trajectory, your outlook on life and money as a whole, regardless of where you are in your financial journey. I cannot recommend this enough. It's the beginning of the new year. If you're gonna pick up a book this year and you don't know which one you wanna read, please snag a copy of this. So that's really all from me today. If you guys enjoyed this video, make sure to drop it a like and subscribe to my channel. It would mean a whole lot. I really appreciate everyone that has supported me thus far. It means the world to me. So I'll see you guys in the next video. And until next time, stay curious.